Hey guys, Dave Keller here with Market Misbehavior. I was asked recently on financial television to talk about Robinhood. Robinhood the company, also Robinhood the stock. This is leading up to their first earnings announcement last week. There's a lot of speculation coming out of their IPO what the investability of the name would be, and so I was asked to comment on some of the strengths and weaknesses of Robinhood as a company, just the overall, the app and the user experience and what that means for the company's potential profitability, but also the price itself, and thinking about the supply and demand and the emotional experience of investors trading the stock so soon after its IPO. So what we're going to do today is talk about Robinhood, really the good, the bad, and then focusing particularly on the technical configuration. So today we will answer the question, what's wrong with Robinhood? So today we're going to talk about Robinhood the company, Robinhood the stock, and in a brief amount of time I'll try to summarize where I see things headed in terms of the overall configuration, the overall consideration of some different factors, but then also focusing on the technical picture, which for me it's always important to stay grounded in the stock price. If you know nothing else about a company or an ETF, focus on the price. That will tell you most of what you need to know in terms of the investability of the asset. Before we get to that though, I just want to remind you, if you like this sort of thinking about investor decision-making, behavior, routines, charts, and technical analysis, and everything in between, I hope you'll subscribe to my channel. It'd be great to have you along this ride. Also, give the video a like if you appreciated it. We'd very much appreciate that back. Finally, put a comment below the video. What do you see coming up for Robinhood over the next month or two? Do you see this as a thumbs up or thumbs down? And why? Where do you see the stock headed in the next month or two? So usually at this point, I'd say let's go to the charts. But now I want to spend a little more time before we look at the chart, just talking about the company, right? When we talk about Robinhood the app, Robinhood the company, there are a number of things to consider. And again, I'm not a fundamental analyst. This is not meant to be an exhaustive dissection of Robinhood's balance sheet and income statement or all of that. But I think it's more thinking about the narrative and what the potential upside and the potential downside for Robinhood is in terms of its uptake, in terms of its ability to transition from an app that's gotten a lot of eyeballs and a lot of participation to a company that's able to become profitable to a stock that is actually an investable stock with potential upside. That's quite a series of steps for something to take. So my goal here is just to talk about that transition and where I think Robinhood is at in that overall process. What's the potential of Robinhood being a decent stock in terms of the actual upside potential versus downside potential? Think of it in terms of good versus bad. That is an oversimplification, but what's going well, or what is a check in the positive column? I think the pros for Robinhood include their ability to empower individual investors. You're seeing a new group of investors participating in the financial markets, many for the first time, and I see that as a net positive. You have a group of new investors that are able to access stocks and ETFs in a very low friction type of way, right? It's relatively straightforward to get an account set up and actually get trading, and I think that's positive. The fact that it's all done through a mobile app for the most part is pretty powerful, right? You have a whole generation of investors that are interacting with their entire world through a mobile device as opposed to a desktop application that you're installing or even a web-based application. So I think the fact that it's driven off of a mobile app is pretty good, and you can see obviously from the number of accounts and the trading volumes how much Robinhood has been able to appeal to a certain demographic of investors. I think that's all a net positive. Last thing I would say in the positive column is the fact that not just for Robinhood, but for any investors, we as investors, as individual investors, are able to access the financial markets, particularly equities and ETFs, lower, more cheaply or cheaper and easier than ever before, right? It is relatively inexpensive to trade stocks or ETFs. It is super easy to do so relative to what it was 20, 30, 40, 50 years ago. So, I think in terms of low cost and low friction and low barriers to entry, it's pretty easy and easier now than ever for individual investors, particularly inexperienced investors, to access the financial markets. And I think overall that's a positive. The whole idea of empowering individual investors is a good thing. I've spent much of my career, particularly recently, really focused on empowering investors, whether it's individual investors or financial advisors, with my own research firm called Sierra Alpha Research, my YouTube channel called Market Misbehavior, my premium memberships for Market Misbehavior, and also my work with StockCharts.com, which is designed to give individual investors and financial advisors the tools they need to make better investment decisions. And so the idea that we're empowering investors, I think, is overall very much positive. Those are the pros. What are the cons for Robinhood, the company, Robinhood, the app, and Robinhood, the potential stock? Well, when we talk about empowering individual investors, we're not necessarily talking about educating individual investors. And I think that's a big, a challenge. Empowering investors to take action is a good thing if action is the right thing, right? If by trading more, they're actually helping their accounts. It's not necessarily always the case, right? And I think there's a difference between your ability to trade stocks and that being a good idea for you and your particular financial situation. So I think, allowing people to trade stocks easily seems like a very good thing. But if you allow people to trade stocks and not really give them the tools they need to make good investment decisions, I don't know if that's really helping individual investors necessarily. So while Robinhood, I think, could certainly do more to educate investors, I think the good news is through places like StockCharts.com, through Market Misbehavior, my own effort, and many, many others that are trying to educate individual investors. I think there are many opportunities for individual investors to learn the skills that they need and learn good routines and good decision-making processes, but it's on the individual to do so. I don't think that Robinhood necessarily makes it super easy for you to learn how to invest, although they have certainly made some efforts. I think the onus is more on the investor to learn what you need to make better decisions. I think one of the other challenges is a focus on reward over risk, right? And an outsized focus on potential reward and an under focus on potential risk. If you think about what you're doing when you're trading, a stock and you're getting the confetti and the unicorns flying around or whatever happens when you trade a stock successfully, it is encouraging you to take action and make a trade, but it's not necessarily encouraging you to think about the reward versus the risk. What sets, I think, novice investors apart from more experienced investors institutional investors usually have an even or much more even focus on potential reward versus potential risk. By buying an equity versus buying like a treasury bond, which is essentially a low risk or no risk investment, by buying an equity, you're taking on a little more risk. And because of that, you're paid with potential outsized returns, right? You have the potential to gain more and you have the potential to lose more. And you need to think about that balance, right? And make sure that you have a good idea of risk versus reward. When I went through the CMT program and learned more and more about technical analysis, it was thinking a lot about risk versus reward. What's the potential upside versus the potential downside? We'll talk about that with Robinhood in particular here very, very shortly. So I would encourage people using an app like Robinhood to think about, I don't think there's enough of a focus on the potential risk, but think about that, right? When you buy a stock or an ETF, or when you short a stock or an ETF, or when you trade options, you are accepting a certain amount of risk. You really know what that risk is. Risk is not a bad thing, but you should be aware of the potential downside and the potential upside and plan for that accordingly. I think a lot of people confuse zero commissions with zero cost, and that's not a Robinhood particular thing. A lot of brokerages use what's called payment for order flow, which is basically they don't charge you a very high commission or no commission, and you're paying for their services. And I don't think it's a bad thing that a broker charges for the service they're providing. I think that's totally reasonable for a financial institution, but the challenge is transparency, right? Do you really know how much you're being charged to place a particular trade? When it's a commission and you know it's $10 to make this trade, you kind of know it. When it's sort of behind the scenes, you're not really sure how much you're paying for that access. That's where people have a little more challenge. And I think that's a challenge that Robinhood will have to overcome by educating their users. One of the challenges, I think, when you have a lot of new investors, and it's not, again, Robinhood specific, but just generally speaking, is behavioral biases. Behavioral biases tend to run rampant. And this is a challenge for a lot of new investors. And I've seen it with people using an app like Robinhood, also cryptocurrencies, the crypto markets, you see that as well, where you see exaggerated volatility because there's exaggerated emotions. Behavioral biases that I think will come into play are things like overconfidence, where you feel like you can't lose. You feel like you are a rock star investor because you're able to trade stocks so easily using your thumb on your iPhone. You have the ability to, you can do no wrong. Over trading, which is basically, you basically, revenge trading. You had a bad trade, so you try to beat the market by trading even harder the next time, having that bravado. Confirmation bias, which is I'm bullish on this particular stock, and then I just find reasons to be more bullish, and I think social media certainly exaggerates that. If you want to find a group of people that are super bullish about Bitcoin or Ethereum or Robinhood the stock or AMC or GameStop or Microsoft, you can find a chat room or a Discord channel or wherever, Twitter, where you can find a group of people that are just going to cheer you on and make you feel like everyone is also bullish, and that's a good thing. So the challenge is, what you want to do is have more of an emotionless decision, right? Gather evidence and focus on the weight of the evidence. Don't just gather evidence to support what you're already trying to do. So my concern with apps like Robinhood and new investors is that behavioral biases tend to be a bigger part of your decision making. And over time, what I hope you can do is make it less and less part of your decision. That's a lot of what we try to do at Market Misbehavior, for sure. Finally, there's the principal agent problem, which again is not Robinhood specific, but I think this means a lot of new investors using an app like Robinhood and other apps like this are gonna find, if it's not obvious already. A principal agent problem is where the principal and the agent, right, the two of us, me as a user and Robinhood as the app, when our goals are not in alignment. For a brokerage, any broker, their goal is to get you to trade more. And so they have a lot of tools to try to encourage you to take action. If you just sit there and park your money there and don't really do anything, it's certainly, you're not as helpful to them in terms of improving their bottom line and building their business. They make more money the more that you trade. So they are motivated for you to trade more. More often than not, trading more is rarely the right decision. Usually, actually tapping the brakes a little bit as an investor, more often than not, can be kind of a good thing, or certainly a good thing to keep in mind. Over trading and churning your portfolio and unnecessary turnover doesn't tend to help your long-term returns. And so there's this challenge where their motivation is for you to trade more. Your motivation may actually be to trade less. And as a result, you need to make sure that you are strong and stay true to your process and your goals, and not fall victim to what they may be, someone else may be encouraging you to do. So that is sort of the overall way I would think about it. I think there are certainly there are positives to what apps like Robinhood provide in terms of their access, in terms of their empowerment, and the ability to use mobile devices to access a lot of things very easily and relatively cheap. And I think that's a positive thing. There are a lot of challenges, though, and I think, unfortunately, that puts a lot of the pressure on the investor to actually take the steps you need to educate yourself and learn about what you need to make sure that you're making the right decisions. Now let's actually get to the chart of Robinhood. And looking at the chart, you can see where things are at. So here's Robinhood, the IPO here around $38. You can see on day one into day two, we sold off very quickly down below 35. From there, we accelerated to the upside. And this is when you had the initial IPO participants, but this is where Robinhood, I think, officially became a meme stock, where you had a lot of investors piling in very quickly, and the stock went from 35 up to the mid 80s, over doubling in a day or two, in a significant jump. But after that initial excitement wore off, the stock has been in a slow and steady decline. And I think what I would remember with a new IPO name is, the more data you have, the more price data that we build, the more we're going to learn about this stock and its performance and what makes sense for this particular name. But thinking about previous IPOs and previous meme stocks that have had this big jump, you've now set a very high watermark, and $70 a share is the high close. That's from the first week in August. After that big run up, sort of settled down there and closed around $70. So if we would rally, that's certainly the upside objective I would be looking at. I would be focusing on two things right now, right? Maybe three things. Number one is this pattern. If you look at the daily chart after that big run-up day, and you look at what's happened since then, you've seen a steady pattern of lower highs and lower lows. If you just look at the highs that are kind of sticking out, with lower highs on both sides, and you look at the lows that have higher lows on both sides, you can see this steady decline of lower highs and lower lows. And overall, that is a sign of relative weakness, right? That's an indication that even though there are days when the stock is bouncing higher, overall the trend is still positive. That changes once you get a higher high, right? So at this point, $52 or so, which is the high from about a week ago. Once you finally eclipse that, we've now changed that pattern of lower highs and lower lows and made it more of a pattern of higher highs and higher lows. That brings me to my next point, which would be a higher low. What I would want to see on a stock like Robinhood is we now hit a floor around 42.50. We've bounced up 7 points or so and gotten up to 49.40, 49.38 as of today's close. You want to see the next drop to make a higher low, which we've not done yet. After the initial run up is actually made a higher low. Every time we sell off, we undercut the previous swing low. You want that pattern to change. You actually want to establish a higher low. So higher low, higher high, those would be the two things from a technical perspective
I would be looking for. The other way to think of it is just really look at where we're at and look to the left and see what key levels make sense. I think 42.50 is the floor, and it's only a couple days old, so this could be a fluid situation, but making sure that we don't undercut the previous low is really key. And I mentioned making a higher low. That's the way you would do that, is you remain above 42.50. So I think that's the line in the sand right now. If you would break that, you always go back to the IPO price. IPOs tend to have a memory around the IPO prices around 38. That's where a lot of early investors got in. That's sort of where they're going to be primed when they look at this chart. And again, when we get down there, you really haven't undercut that IPO price by too much. So getting down at or below that level would certainly, you'd expect at the very least a meaningful bounce off of that level, off of those levels. Now, as you rotate higher, $50 is a really interesting central point. Again, this is only a couple weeks old, but sort of a median price to where we've been at the last couple of weeks, right? We sort of settled in. The market is telling you that Robinhood is worth around $50 a share. That was the big drop after that big spike higher. The next day we came back and closed almost right at $50 a share. From there, we've gone a little above, we've gone a little below, but really revolving around that $50 level. So I think in general, staying above $50 would be more of a positive sign. Staying below $50 is more negative. So getting above that median price would be a first step. Getting above the most recent swing high, establishing a higher low would be the real key. If we do break higher, I would focus on that close from that first week in August. That's around $70 a share. That's where the stock settled in on that big blow off top that we had when it really caught a lot of investors' attention. If we do break below 42.50, I would focus in on that IPO price, which is at 38, which is where, again, a lot of investors looking at the chart are going to be focused in on, because that's where they initially got into the stock.
So that is our rundown of the good and the bad and the chart, right? Focusing on the good conditions, the positive, underlying themes to a stock like Robinhood, some of the challenges that they're facing. And again, a lot of it was not just for Robinhood in particular, but I think brokerages in general with this influx of new investors. And again, I would encourage you, if you're just getting started, if you're learning about investing, and the Robinhood IPO is the first real attempt that you're making, I hope you take some time and prioritize educating yourself, learning from investors that have come before you. See what has worked, see what has not. Think about how you're spending your time, what information you're consuming, the routines that you're going through. Again, if you subscribe to the Market Misbehavior YouTube channel, hopefully you'll get a steady stream of encouragement to make good decisions. Think about price and trend and sentiment and all the things that we talk about on our channel. We'd love to have you along the ride as a subscriber to our YouTube channel. Also, give the video a like if you appreciated it. We very much appreciate that back. Finally, put a comment below the video. What do you think about Robinhood? Where do you see it headed in the next month or so, and why? For everyone here at Market Misbehavior, I'm Dave Keller. Be well, stay safe. We'll talk to you again soon.